Today we're going to be talking about how to price your consulting services.
Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
Hi, my name is Russell Pearson and welcome to your Consulting Business Podcast. This is episode number 13. Today we're going to be talking about how to price your consulting services, because it's fascinating how people have been in the game for 20 plus years, are still pricing out of date. People have all sorts of different models for pricing their consulting services, and the majority of those systems that are around effort, time, quantification of effort are often missing the opportunities to be charging far higher fees. Now, to start this conversation, I think I want to talk about a couple of things. What you can charge for your consulting services is not limited to your own imagination. In fact, funnily enough, it's not what you're willing to charge, it's often what people are willing to pay for the value you are providing. So I'm going to start by saying the person who you really need to have a look at when it comes to value-based fees, which is one of the topics we're going to be talking about today, certainly Alan Weiss, who wrote the book on, which is literally called Value-Based Fees. And he prices these books at a, at a high value, and it's always a fun experience to speak to Alan. But the opportunity you have in the book is to really understand that, number one, just because you have a certain value on what your services may be worth from your point of view, the client themselves will have a very, very different perspective on that topic. And a lot of the time when you decide to price yourself without consultation, without collaboration with the client, often you can miss out on huge opportunities. And just to start, I remember a story, a colleague of mine who's in the sales space used to do a lot of sales training, and he did consultative work in that same space as well, and went into a meeting where the client asked how much it was going to be to train his sales team. And, he was a little bit shy at the time, was still trying to push his numbers up there, though, and he said, it's going to be $7,000. And then the client goes, okay, well, that seems reasonable. And then he pulled out his calculator and he goes, all right, so 7 times 21 equals... And my colleague had to bite his hand not to say anything, as the client then calculated the actual value that he was more than happy to pay to have his sales team trained, which was 7 times 31 rather than the 7,000 total that my colleague was expecting. So where we come at pricing can be one that I know a lot of consultants, because there's a lot of us that are quite compliance-based people, want to come from a systematic approach to make things efficient, to go, this is the pricing because... But often what we actually discover is that there's far more opportunity in value-based pricing, because it does two great things. Number one is it enables us to get usually a higher fee, but number two, it pushes us to actually get results. Now, if we are in the space of helping someone transform from where they are to where they need to be, then really our focus should be about getting them there. Now, does that mean that we're going to be the one who does the delivery? Certainly not. Not necessarily all the time or ever. But it is certainly our real responsibility to help them transform, whether that be through guidance, whether that be through some form of design, whether that be through some form of strategy. And just having a strategy that might have worked in the past for some other business or some other situation isn't necessarily always going to work in the future with the client you've now got in front of you. So I always say that you really need to design with that person in front of you, not just bring a cookie cutter system to the job. Doesn't mean you can't have good processes, doesn't mean you can't have great frameworks, but you need to really make sure that you're adapting, if not tailoring, your processes, your procedures, your frameworks to make sure that the client is going to get the best possible outcome. Usually that's because there are certain people that have different beliefs or limiting beliefs inside their heads, and you need to work with those people to overcome those situations where other people may not have. And so those people who are ready for what you've got will often get better results. So how can you prepare your client to be ready? All right, so we'll put that to the side, because that's really not the topic of today. Today is really about the pricing. And to talk to that topic, let's go back to when I sort of started, even my agency, which wasn't necessarily consulting at the start. It was very much a service-driven opportunity. But I want to talk to this because there'll be people who are starting their consulting businesses who may have this framework in their own head, which is, what was I actually being charged at, or what was I being paid as an employee doing this same role before I actually went and started my own thing. Now, I knew at the time that I think I was being charged out at $80 an hour or something ridiculously small. This is way back in the day. And so I entered the market thinking, well, I could charge that, but maybe I'll go with some version of a competitive advantage, which on price is never a competitive advantage, but that was what I thought way back in the day. And so I'll come in at $65. So this was my starting fee. Now, mind you, it was better than what I was actually getting on an hourly rate as an employee, but I hadn't factored in 100 different things that you have to factor in running your own practice or running your own business. Everything from HR, even for yourself, tax, accounting, finance, that whole side of things. You've got the actual sales and marketing side of things. And even though I'm in that space, I had neglected to consider that. And so I went in thinking I only need to work 16 hours a week and I'm going to be far better off than I ever was as an employee. But the reality is those 16 hours are paid production work, and there is so much more that comes into running a business. Now, if you're efficient, if you're effective, you could actually just spend like maybe 1 day in a 5-day week doing all those things. But at the start of running a business, if you've never done it before, you will make mistakes. So allow yourself the time to grow into that role of business owner / manager, right? So step back to there. I'm earning $65 an hour. Now, what I discover is obviously I'm worth more than that, and so I start raising my fees. Now, every time I raise my fees, there are challenges from clients I'm already working with, where I have to have that new discussion, that new negotiation about how and why my price is changing. Now, I went up to, I think, 70, and then I went up to 80, and then I went up to, I think it was like, I wanted to cut it just under 100. It was like 95. And then we went to 110, 120. I ended up going to 170. And even then, I'm still not charging what a lawyer or even an accountant's charging. But it was about that time that I realized if I'm actually going to be selling myself on hours, I was always going to paint myself into a corner for one or two reasons. Number one was I was actually very fast, which means that I was never getting the true value of a job that I was actually taking, because I would get it done very, very quickly. And so I was the faster I would do it, the actual cheaper my project would be. So it doesn't do anything for me. It doesn't do me any favors. On the flip side of that, I was always being made accountable to the hours that I was spending on things. And I was really in this, like this is the problem with the transition from employee to managing yourself, if not business owner, is that you come in with this employee mentality where you're kind of happy to be accountable to hours because it's what you've been used to. But the flip side is you don't want to be in an advisory position. You don't want to be in a consulting position where you're having to be managed by the client. And so hours, you really want to take hours out of it. Now, to start, you might find that there are certain costs that are actually part of a project or part of how you actually define your fees. Yes, you might have to quantify that to hours or specific activities or whatever it might be. But certainly don't go bringing that to the table when you're talking to the client, because then the client is going, how long should this take? All right? They've got their own version of what that means. They've got no idea what it actually takes to get the job done from your point of view. And so you're very much painting yourself into a corner. So if you can avoid the whole hours piece, if you don't want to be an employee, if you want to actually have a seat at the left side of the client, which is the advisor role, which is the place that you will actually have your opinions heard, where they will take your advice rather than actually assess you from a employee point of view, then you want to get rid of that whole hour thing. Right? There are still plenty of people, lawyers in particular, who are charging hundreds and even thousands of dollars per hour, and they're very happy with that. But the reality is they don't have the freedom that they would like from charging value-based fees. Now, what is a value-based fee? Well, it's a fee that you will charge that people are happy to pay based off the outcomes that you're getting. Which means whatever outcomes you're getting, you want the client at the very least to be able to quantify what that means for them from a monetary value point of view. There are many ways to do this. Obviously, it's a lot easier if we're talking about specific business outcomes because we can usually apply dollar figures to them. But even if we're helping someone in their life, they're transitioning from something to something else. Maybe they're actually like they're moving from. Well, I've heard many of my colleagues talk about addiction, for instance. Addiction is a big space that people are helping them with. What would the change of lifestyle mean to them from a monetary point of view? Well, they go, well, I don't know, how long's a piece of string? Right, well, what would they need to do instead of actually doing this piece of work with you to get the outcome? And maybe there's all sorts of recovery programs. Maybe there's actually moving into another state. And I don't mean just a state of mind. I mean actually a state in the country. There's all these other costs that are contributing. And you can actually anchor those costs and say, well, these are the things that you would normally need to do. And that could cost you $20,000. I'm looking to do it at this fee, which is actually a more reasonable price versus that they would need to do. And ideally, they can actually see the value with working with you because of your expertise. All right, so we'll put that to the side. But I have another colleague that I can bring to the table on this one who does a magnificent job. And this is a case study to learn from. I think this guy's fantastic. His name's Steve. And Steve, if you're out there, you'll know who I'm talking about when I actually describe it. But what he does is he goes and speaks to large organizations about improving their culture and what that would mean. Now, culture can often be one that's intangible. A lot of people think that they can't put a price necessarily on culture. Well, funnily enough, you as the consultant don't need to put the price on it. So what Steve does is he comes into these organizations and he does an assessment. All right. The assessment is from the team's point of view. So he'll have hundreds, if not thousands of employees citing the different things that are actually going on in the culture that they're not loving. What would be the case if those things changed? What would they have instead? And what would that mean to the bottom line? How would that improve their efficiency? How would it improve their profits? How would it improve their turnover? And all the other costs around that. And he gets them to quantify it. And they always quantify it 200% more than he would ever think to quantify it at the start. So he's thinking, I reckon we can get an improvement of maybe, 10, 15% on these costs. And they're coming back and telling him, no, we can get between 45 and 65% increase in these costs. He goes, oh, wow, well, that would be X amount of dollars, right? And they go, yeah, absolutely. Okay, well, let's talk about that. Suddenly he's got this number to talk to and he can work down from there. Now, let's say that the improvement that the client has defined comes in at $600,000. Okay, that's a $600,000 improvement. All right, fantastic. How much would you pay to have that $600,000 improvement? Now, I've done tests around the country and all these speaking events that I do where I've asked very similar questions to this in a case of, let's say we took 100,000, but we'll take 600,000, and say, how much would you pay to get $600,000 back? And I get people to put their hands down. It is very rare that I have people putting their hands down before they get to the 50% mark. So they would spend $300,000 to get $600,000 back. Some people go right up to 90%. Now, we're talking profits here. We're not talking about just expenses. So we'll put any sort of thought you've got about but how much are they losing in expenses? We'll talk profits, the net profit at the end of the day, not gross. And they will pay, up to 50% of this figure. Now, there is a really nice, useful rule of thumb. 10% or 5%. So 10 times or 20 times whatever the value is. So if it's $600,000, you really should be comfortable in charging $30,000 to $60,000. All right, that's the 5 to 10%. There are a lot of people who are coming into a company and making these sort of changes, $500,000, $600,000, even above $1 million in the transformation, the outcomes that they're getting for people. And they're charging a fraction of that price. They're charging maybe $8,000, maybe $10,000. So if you actually go to the other side and you have the client quantify the value that you're going to get from that, you will see that the number that they come up with is far larger most of the time than you'll ever predict. And so you don't need to convince them. They've convinced themselves. They're actually telling you they're fighting for the opportunity, which means if you come in at 10% and go, all right, well, I think we can get you that $600,000. It's probably going to be about, $59,000 or $60,000 to make that happen. You're in a far better position of getting that price because you have positioned with value. You've positioned against a value proposition. Now, one of the things I like to do on prices is I do indicative conversations. I talk about collaborative conversations with the client, and I've talked about those, I think, in the past, and I'll be talking about them in a future episode, talking about negotiation of these sales contracts. But one of the things that you can bring to the table is called an anchor. All right, so an anchor is a number or a thing, anything that you compare against. So an anchor against $60,000 could be $80,000. And you go, well, projects like this have cost other companies $80,000, but I think that we can actually get it done for less. Anything less than $80,000, wow, they've given us a discount. and funnily enough, $80,000, you come in at $60,000, they're a yes. If they indicatively said, okay, $80,000 might be a stretch, but I think we're in the right ballpark, you coming in at 60 is going to get you there. So don't think $60,000 is some magic number for yourself. What I'm saying is 10% of $600,000 is that number. Now, if you're only providing maybe $10,000 of value for something, maybe it's a small business, maybe it's an individual, $10,000, then maybe it's only $1,000 you can charge. All right, but you've got to think of it that way too. Some people are charging incredible rates, and I'm thinking this especially in the digital marketing space. There are some people charging $1,500 for $800 of advertising, and it doesn't make sense. But then at the same time, maybe those people shouldn't be doing that sort of work. So you've got to actually bring your not your morality, you've got to bring your ethics into part of this discussion to go, should I be working on these problems, or should I be working on more valuable problems? And if I'm working on more valuable problems, then my outcomes are worth more because they are quantifiably more valuable. And so the question for you is, number one, are you working on valuable enough problems? Number two is, can you quantify it? And ideally, can the client quantify it? Can you help the client quantify the value of the outcome you're going to produce? And then number three is, what do you need to put in your mouth to stop yourself from laughing or smirking or smiling when you actually say the price? Now, that's a bit of a joke, but the reality is sometimes that's the case. You actually need to just step out of yourself and go, this is worth the value. I might not even feel the value here in myself, but for the client, it is worth it. And yes, I can get them the outcome. Always an ethical question. Can you get this person the outcome? And if you can, then charge the value. If you're not sure, all right, then put a guarantee on it. There's no reason to charge people for value you didn't get if you're going, well, yeah, but I worked really hard on it. Worked really hard. All right, well, then you're stepping down into employee again. And so that's a question for you. Do you want to be an employee? Because I know some incredibly well-paid employees who are consultants, and they are getting, $200,000, $300,000 in an annual wage. And to get that, actually stepping out into the world of self-employment can be quite challenging for a lot of people, right? To get that sort of money, you need to usually be having 2 or 3 times the turnover to be making that take-home cash. Right, so if you want $300,000 in your back pocket, you're at least probably going to be needing to bring in about $600,000. These are rules of thumb, but they are, unfortunately, they're things that I have seen over and over and over and over and over and over again. And yes, there are ways to squeeze more profits out. But as a standard rule, if you're doing information work, if you're the one doing the work, you can usually do 2 times. If you've got a team, or you're going to have to actually have someone outside the company do the work for you, then it's usually 3 times. So if you want to take 300 home, you might have to be making $900,000. All right. So there's the sort of numbers to be thinking about. But at the end of the day, a lot of the consultants I'm speaking to have been doing this for a long time. So they've been doing it for 15 years, 20 years, 30 years, whatever it might be. And so a number of people are slowing down. They're actually not wanting to work more, which is fine. That's great, actually. You've just got to make sure that in the process of winding down, if you want to keep your fees where they are, then you've got to make sure that you're doing more valuable work. You've got more experience, you've got more expertise, you've probably got more tools and tricks up your sleeve. You can get those outcomes more often because you know how. You've done it enough times. So really, it may be time to start charging your worth. And in the process of doing that, it's not a case of sending a proposal to a faceless figure. It's always a case of getting there in a conversation with the client who can quantify the value for you, getting that indicative yes, and then discussing the next steps with them to get you on the books. My name's Russell Pearson. Yep, doing these podcasts is just one of the fun things I do. We also do a Tactical Tuesday, which is a live session where I give a little bite-sized tactic in the Future Proof Business Group, which is a business group over on Facebook. So if you're not part of that, come on over to Facebook and join in. And if you run a service-based business, if you're in the best business of offering expertise, if you're an advisor, a consultant, or anything like that, we'd love to have you there. I think that it's a really good community, and we have a lot of really valuable discussions, and I share a lot of, I think, valuable content as well. So that's one place to go. Consultingbusinesspodcast.com is another fantastic place where you can get more episodes of this, and you can also get some resources. I change the resources up there from time to time, so if you haven't been there in a while, go and have a check at the moment. We've got Clients on Tap is one of the downloadables. We've got Better Clients Fast. That's another one of the downloadables. If this is of interest to you, if this topic is of interest to you, then definitely subscribe wherever you're listening or watching it. If you're on YouTube, hit the subscribe button, hit the bell. If you're on a podcast platform, then subscribe to the podcast platform of your choice so that I can continue to share this stuff with you each and every week. We're on the run home towards Christmas. It's getting it's a busy time here. Australia in particular seems to slow down. It doesn't mean that you need to slow down. And I think this is a really nice point to end on, since I think we're releasing this next week, which means that it'll be the last week of November. So heading into that Christmas time, that holiday season for those who don't celebrate Christmas. It's not a time when no one makes decisions. People make decisions, especially around the turn of the year. You know how many decisions they make around the turn of the new financial year. So it's very much the same thing around the turn of the calendar year. So I want to really dispel the myth for people that now's the time that we shouldn't bother having conversations with people. No, this is the time to have conversations with people, because a lot of people want to be making a decision. They want to be preparing for the next year. They want to be getting themselves in the best place they possibly can to be ready for, really, I think, what is a return globally to some form of normal. I mean, it's not new normal, it's not old normal, but it's some sort of normal where people are actually starting to get back to doing things again. So if you haven't recently, go and speak to some past clients, go and speak to some past prospects, go and speak to those people who often refer work to you. Make an offer. Go out there and talk to people and see what they need, and obviously, ideally, see what they want. If you start listening to people about the things that they want, and then if it's in your wheelhouse, suggest to them that you might have a few ideas, you get into a conversation that allows you to design an outcome that is valuable and based on value-based prices, which, at the end of the day, for many of us, could actually deliver us before the turn of the new year enough work to see us through to 2024. Until next time, my name is Russell Pearson. Stay passionate, and I will catch you on the next one. Bye for now. Thank you for joining us on Your Consulting Business Podcast. Make sure to click the subscribe button for future updates, and also make sure to go to consultingbusinesspodcast.com for goodies made especially for you by yours truly. I will see you on the site.